Good morning, everyone. Today is Monday, May the 15th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are holding our edges. I was just looking at the motion that we've had in the monthly chart. We can see that the persistent bid is still underneath. It's still underneath there, and we still keep lifting above this area. Notice for the ES, we have not gotten above the 4203 number except to peak out, and then we've completely fallen back into the range. And so we're still sitting in a range-bound environment that has a propensity to fall based on news here or there, but the buyers are always coming in. So we have to anticipate, because of that in the end, we will see more upside in the grand scheme of things. What we are looking at is 1, 2, 3, 4, 5, 6, 7, 8 wicks from a daily perspective coming up into 4173. This area here at 4154 is huge. I mean, very choppy, very noisy, but buyers keep coming in at around that 4020 area. So what's the play today? It's bullish. Notice how far above we are from Friday's close. So it's very likely to gap open. We're coming into the end of earnings season. We have Fed speakers every single day this week. Completely annoying, but nevertheless, that's it. They can move markets quite a bit, and so my suspicion would be wait for the fade and then look for the bounce action. What I am seeing is over the last 3 days, high, lower high, lower high, and the pre-market is also a lower high at 4156. My plan would be buy the pullbacks. If it gets above 4156 and just has a shallow clip backwards, or it pops right out and continues, this chart has probably got room to run all the way up. But Jeb Karzan suggests that because we're coming into expiry week, that we are going to have a little bit of a dampening event from these bounces. We'll just have to see. We will just have to see. For me, I'm looking for an exhaustion event up here to take a short. If the short doesn't immediately start to work in my favor, and I mean within 5 minutes, I'm going to cut and run. Right? So I'm looking at the topping formations along maybe 4165 to 4167. I'm going to wait until it blows past it and then loses it again in order to make that trade. I'm going to look for topping formations in every single trade I make to go short, because a lot of people are looking for breakouts to go long. Okay, so let's review very quickly. What does a topping formation look like? Once again, I test a high. I fade, but I must break the low of this area of support. If I can't do that, then it bounces into a new high. My trade is done. There's no entry point right there. Okay, so look at where it works here. This is a perfect example. I get all the way up here, immediately fail, and so what I'm looking for is a bounce that comes here. I could take this short and have this as my stop, but the better trade is to wait for it to lose this level and essentially this level, and then take the short from there, right? 1, I test higher, but I don't hold higher. 2, I pull down into support. That's a little squishy, so you could call it that. 3, on the bounce, I don't make a new high, and I pull back. That's what a topping formation is going to look like, and that's the one I would recommend looking for at any of your trades for shorts today. The Qs looking very solid all the way up, making higher highs last week. This morning we're sitting inside of the prior week's close candle body and just outside the close. So it's still very bullish, above the monthly close last month and coming into the last week's high. And so what are we looking for? Well, here it is. Take a look at this. Old resistance becomes new support. The second it comes in here after bouncing higher, that's your buy zone. On a daily chart, it happened at the low of the overnight here. So this thing is in buying pressure mode. Where's it going to? Well, the first place it's going to head is up here into the congestion. So if you were looking at this going old resistance, new support, I've got myself a buy zone, the buy would have actually occurred on Friday. And so as you're looking at this, even in the pre-market last night, you could say, hey, listen, I'm going long. Up here is where you're going to find resistance. And you can see the traders backing off of this 13,448 level. No doubt about it. Right? That's where they are sitting for the sell zone. So it'd be placed to take partial profit from an intraday trader perspective. If it pulls back, holds it again, what you have now is a lower high. So you want to be very careful. You wouldn't go as big size, and you'd pop up right into that space and try it again. All right? If you're thinking about a short, I would say, no, don't do it, because it's an inside candlestick. Until it breaches the level and heads up above here, and then immediately fails, builds a topping formation, yes, but pullbacks or buy zones here. And this is a very clean buying area, even though, look at how big the stop is. It's almost 50 points wide, right? Well, not almost 50, 42 points wide. And so that's big, that's big. All right. That's it for me, I think, maybe for these guys. Let's take a peek here. Sorry. Maybe I won't, just for heaven's sakes, did I just lose my internet connection? Don't you just love this? Okay, RTY, let's go. All right, so you know this has got the small caps. Last week it was terrible, just falling like a stone. It did make higher low though. Inside candlestick formation means that if I get to the open and above this open of the candlestick from last week, what is that, 1765, price action could be doing itself a favor and getting a big bounce, right? You could look at this. This is a little bit of a red dog reversal. If you look at this from a daily perspective and you listen to Scott Redler, we've got this area, it pulls down here, closes above the low and into the bodies of the prior candlestick. That means that you could take the long right here at the open of this level and just walk it up, and then you can add back if this pullback is higher low. So this is a buy zone right here, right off of this edge coming into the space. Where's it likely to go? Again, 1765 and 1782. Oil is probably going to have a double bottoming formation around 69. I don't believe it's time to buy gold. It's on a fade. And so I would say pump the brakes right there. I want it to come all the way down here, right? 1951. That's what I want to do. All right, let's get over